you're just seeing things accelerate in every single way. You know, the way that the central banks have been accumulating, the way that they've been standing for delivery, it just feels like things are getting far more tense and tight everywhere, even in terms of this country, that something needs to break. This divisiveness that we see, where, you know, there's no common narrative any longer. Like we look at federal employees that are, you know, wasting and stealing taxpayer dollars as somehow a threat to democracy on one end, where President Obama deported over 5 million illegal immigrants and the left stayed silent, yet here you got Trump doing 20,000 convicted criminals and he's labeled a fascist. The double standards are staggering, and I think that these are the kind of, it's kind of like the end game where we're that far apart. As far as gold is concerned, and as far as silver is concerned, I think that there's a high probability that what we've seen really, as far as I'm concerned, since June 12th, with gold down about $100 and silver down about $1, is not a reaction. It's a strategy. It's a strategy that is implemented in the form of a methodical decline, and that decline started Sunday night. It hasn't stopped. This is being done by the bullion banks, who want you to believe the narrative that it has to do with, you know, the ceasefire and moving from, you know, risk off back to risk on. This is price suppression, period. And I say that to you for the biggest reason is that tomorrow is option expiration on CoMex, and Friday pushes the front end month, July, silver contracts into delivery. So there's a lot at stake, the end of month, the expiration, and the July silver contracts which go off the board. You have the second largest short position by the banks in silver in the history of the CoMex market. So, in fact, I said this on a couple of podcasts that I expected there to be a pullback into the weekend as a result of this. My guess is Monday you would see things move the other direction, perhaps Tuesday, simply because you have this big deal happening on Monday. So with the end of the month contracts moving off the board and first day of notice for the July contract. But look, you know, as far as what's happening, people, I think, are too reactionary. They think too much in the moment. The bigger picture was looking very positive for gold and silver long before this 12-day war that we've now seen in Israel and Iran. So, you know, I think it's has less to do with geopolitical events and more to do with commercial bank positioning right now on CoMex, and they have to push it down right now because of this massive short position. If not, you're talking existential threat to the survival of some of these banks who have this massive short position. So I expect it to be short-lived and then resume its upward trajectory the way it had been going for the past several weeks now. In gold already, they're beginning to mitigate in gold. It's like they're losing control. But they want you to believe that this is a safe haven unwind, you know, that the only reason that they've gotten this high is because of the tensions in the Middle East. And they forget that it had been going that high long before this. But yeah, I think in general what you're witnessing is maybe the realization by some of these banks that being short and having to use this much ammunition to hold down the prices is silly. You know, since Trump was elected, Jared, there's been over almost 820 tons with a T of gold have stood for delivery, and almost 9,000 tons of silver.
That's a lot.
The surge of deliveries into CoMex warehouses is is crazy. And this is long before we've seen any problems with what's happening here in the Middle East. So at some point, when we see such physical demand, not just on CoMex, but in the LBMA and all around the world, I think continuing to be naked short is very silly. So I would like to think that we're getting closer to that, because it seems like we've already crossed that line with gold, where they're really not trying to knock it down quite the same way that they did. Now people look at gold, what's it down today? Let me take a look. You look at gold today and it's down 45 bucks. It sounds like a lot, but it's, it's a 1.5%. That's nothing. It's just that as the prices go higher, percentages seem bigger for sure. But yeah, I think that ultimately all manipulations end poorly, and I think this one will be no different as far as I'm concerned. So stay the course. The physical demand is overwhelming. The ability of these banks to easily suppress the price to the point where they have to have the second largest concentrated short position by the commercial banks in the history of the exchange for the July delivery. That tells you that we're getting, I think, to an environment where being naked short like this is really probably not worth the setup probably isn't worth the return when you talk about potential fallout.
Gold and silver have experienced sharp declines in recent weeks. $100 for gold, $1 for silver, but this doesn't appear to be a natural reaction. Analysts suggest this is a coordinated strategy by major bullion banks to manage massive short positions ahead of key events like CoMex option expiration and the July contract rollover. These tactical price suppressions are meant to shape market perception, disguising real economic pressures. However, this downward pressure appears unsustainable. With delivery demand surging and banks nearing historic short levels, the system is showing signs of stress, possibly signaling the end of their ability to control precious metals markets. Despite temporary price drops, physical demand for gold and silver remains historically high. Since 2016, over 800 tons of gold and nearly 9,000 tons of silver have been delivered on CoMex alone. This isn't just investor interest, it's systemic repositioning. Central banks are aggressively accumulating metals, potentially anticipating what retail investors have yet to fully grasp. The dollar's credibility is waning. The supposed safe haven unwind is a misleading narrative. In reality, gold was rallying long before recent geopolitical tensions. As manipulation becomes more difficult to sustain, the probability of a sharp reversal upward in metals prices increases with each passing day.
You're just seeing things accelerate in every single way. The way that the central banks have been accumulating, the way that they've been standing for delivery, it just feels like things are getting far more tense and tight everywhere, even in terms of this country, that something needs to break. This divisiveness that we see where there's no common narrative any longer. Like we look at federal employees that are wasting and stealing taxpayer dollars as somehow a threat to democracy on one end, where President Obama deported over 5 million illegal immigrants and the left stayed silent, yet here you got Trump doing 20,000 convicted criminals and he's labeled a fascist. The double standards are staggering, and I think that these are it's kind of like the end game where we're that far apart. So from a standpoint of unity in this country, of divisiveness, of something ripe for a change. People were talking not too long ago about a civil war when you see all this stuff happening, the protests in these cities. And yes, I do feel like it's getting to that point where we're getting closer and closer and closer to some form of a reset, some form of, you see it politically, you see it socially, you see it morally, you see it economically. You're seeing it in the way that the world is breaking away from the dollar. You see it in the way that the world is accumulating commodities instead of, which is really the the linchpin of the system in favor of treasuries. You're seeing so many things that are accelerating. When we talk about the BRICS in particular, it was Sergei Lavrov who came out and said that their new payment system, cross-border payment system, the bridge technology, would be offered to non-BRICS members. That's a massive deal. You have the BRICS meeting here in July. This is a very big deal. It's just a couple of weeks away. So yes, we are getting closer to that all-in moment. I don't know what the trigger is, but you can feel the tension in the air. So yeah, and I think it'll catch us all off guard. Normally, when you look back at these things, none of us see the pivot. We never would have dreamed that what happened in 2020 would have been something even on our radar screen. But you look around and you have highest levels of indebtedness, lowest level of savings. You have, just a setup that's ripe for change. And I don't know what it will be, but yes, I do feel we're getting much closer to that. And I think all of this stuff is not lost on the rest of the world, whether it be our political thing with Trump and being on the wrong side, whether it be the mismanagement of the world reserve currency, the fiscal and monetary irresponsibility, the divisiveness and divide in this country between left and right and blue and red and black and white and rich and poor and vaccine and no vaccine. And all of these things have just reached a boiling point. So it seems we're getting closer to that moment, certainly, maybe than ever before. And then you look at how the debt just keeps on accumulating. And at some point, the rest of the world is going to say, we just don't want to continue to hold dollars, to accumulate dollars for our goods and services. And worse yet, we certainly don't want to hold treasuries for the reserves in a country that's lost all fiscal responsibility, in fact, lost all fiscal sanity.
Mounting political, economic, and social divides are pushing the U.S. toward a pivotal crossroads. Internally, the nation is fractured deep partisan divides, mounting debt, and runaway inflation erode public confidence. Externally, global trust in the U.S. financial system is deteriorating. Countries are gradually decoupling from the dollar, seeking alternative settlement systems. This shift is no longer theoretical. Nations are preparing for a reset. With inflation likely understated and real wages stagnating, the likelihood of a monetary breaking point increases. As fiscal policy becomes more reckless, global actors are quietly shifting reserves away from treasuries toward hard assets like commodities and gold. The BRICS alliance is gaining momentum. With new members like Indonesia joining and a cross-border payment system, the BRICS bridge being offered to non-member states, the global financial order is evolving fast. If successful, this network could rival the dollar-dominated SWIFT system, drawing in the Belt and Road Initiative, the Eurasian Economic Union, and more. These groups collectively represent the majority of the global population and a significant share of GDP. While the timing of a systemic pivot is unknown, the trajectory is unmistakable. Wealth preservation today isn't about speculation. It's about transferring value into assets like gold, silver, and digital alternatives before the storm hits.
And here we are with Doge, the $90 billion or whatever that they saved, that's 38 hours worth of spending by the U.S. government. It's next to nothing. And they want to raise the debt ceiling again. And $2.5 trillion in deficit spending again. We're not getting any better. The rubber is going to meet the road at some point. So I would look less for that all at once moment and deal with the fact that we're probably getting closer to that moment than ever before. Live in a world of probability where it can't stay this way. There's no reason that anyone would want to hold our treasuries in a currency that is being devalued as fast as this one is. And what is the negative outcome for the treasury market? Don't interest rates really have to go higher in order to entice people or to pay them fair value for a currency that is being inflated away? And that's one of the reasons why there's such an impetus to lie about the metrics in which we gauge inflation, the CPI, through the BS, the BLS, the Bureau of Labor Statistics, they lie, and whether it be through unemployment or through inflation, I think we all feel that inflation is much higher than they're telling us. But these are all the things that add to that moment. But yeah, I do think that the BRICS are a threat that people are underestimating right now, and what it would see. Everyone talked about the fact that they were too small of a group, even though they represented nearly half of the world population, 40–50% of global GDP, 3 of the 4 largest nuclear arsenals, all the commodities, the manufacturing, the rare earths. Everyone said, well, that it's just they can't compete with the dollar in terms of settlement. But when you open up this new bridge network to all of the non-BRICS nations, including the Belt Road, the Eurasian Economic Union, the Shanghai Cooperation Organization, and the BRICS, you're talking the majority of human population and all of the things that go along with it. So that is something that no one really thought of. And if that were to be, in fact, that is the stated goal of the meeting in Brazil, is to find alternative settlement and payment systems outside the dollar to reduce dependence on the dollar. Well, if you're opening it up to all non-BRICS nations and the alignment that they have with the Belt Road in particular, which is 75% of human population in and of itself, 50% of global GDP. Add that to the BRICS, the Belt Road, and all of these countries are closely aligned with China. It doesn't mean they're in the BRICS, but they're aligned. You get countries like Vietnam who have officially applied. You get Indonesia who has officially been admitted. These are countries that are resource rich and are, I think, breaking away slowly. So the slowness of it represents that this is a very big deal, and President Trump is certainly showing you don't want to be on the wrong side of the U.S. agenda. And so I think these countries are trying the best they can to align themselves in a way that allows them to break free, but not until all the I's are dotted and T's are checked. So when that all at once moment is, Jared, I have no idea, brother, but I do think it's coming to a degree that I think it would be nearly impossible to expect the dollar to retain its level of prestige and its level of accumulation and or just its place in the natural order of things as the world reserve. It is if you hold all of your assets in dollars, you're destined to go broke, period. And I think that's really where we're at this stage of the cycle. So yes, it's coming. When? I don't know. And I think it's kind of silly to try and figure it out just to simply say, until it does, we still have time to protect ourselves, and don't look at whether it be Bitcoin or gold or silver or XRP or whatever asset you are accumulating. You're not doing it to become wealthy. You're doing it because these things represent wealth in a system that seems to be going by the wayside. It's kind of the way I look at it.